What if we told you that you could make money in your sleep? Got your attention, right? Wondering how you can do so? By investing. But a lot of Indians are not interested in earning money this way. At least that's what the numbers say. Out of 138 crore Indians, only 1.2 crores invest in stock markets and 9.78 crores invest in mutual funds. Result: 80% of Indians are not ready for retirement. So, why are Indians not investing? Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Click on the subscribe button to never miss an update from us. Here's your story for today. According to the executive director of SEBI, only 27% of Indians are financially literate. This means before making any investment, most Indians need to conduct extensive research. This research usually reveals a plethora of investment options ranging from fixed deposits to mutual funds to even alternative investments like crypto and fractional real estate. And even if they narrow down their research to a particular investment option like mutual funds, the sub options are still endless. For instance, there are over 2,500 mutual fund schemes in India. So investors suffer from the same decision fatigue that we do at an all-you-can-eat buffet. And what usually happens when decision fatigue sets in? People usually decide not to invest or choose to invest in traditional options like fixed deposits or gold. What's worse is even those who choose to invest often do not see the desired results. That's because 95% of active fund managers fail to beat the markets. So, retail investors can't seem to win, something that could be detrimental to their future. Right now, one third of Indians do not plan to retire at all because it just doesn't make any economic sense for them. But these problems seem to be limited to the middle class. The rich can just take advantage of portfolio management services. Why just the rich? Because to avail these services, you need a minimum investment amount of 50 lakh rupees. To solve these very problems, Minted was born. Minted is a digital platform where experienced advisors carefully build a tailor made portfolio for you based on your risk appetite. All you have to do is take a small quiz to ascertain your risk appetite. Minted then uses the Nobel Prize winning modern portfolio theory to curate your portfolio. Currently, they only create a portfolio based on mutual funds, bonds, and US equities. What's the modern portfolio theory, you ask? It is an investment theory that assumes investors are risk averse and tries to build a portfolio that can maximize returns based on your given level of risk. This could be great for Indian investors who are generally risk averse. According to a survey by ET Money, only 35% of Indian investors are willing to take calculated risks, while 34% are risk averse, more given to protecting their money. So, Minted could be a good way for retail investors to begin building wealth. They don't have to take too much stress about the risks or take super difficult decisions themselves. And building wealth has become very important for India because just the top 1% own 40% of national wealth, while the bottom 90% own just 25.7% of the national wealth. Wealth management services could really help bridge this gap. And the time is right for platforms like Minted to create meaningful change. You see, the mutual fund industry is growing at a CAGR of 18% and is set to reach an AUM, that's assets under management, of 50 lakh crore rupees by 2023. And for every rupee that is invested in mutual funds by next year, 21 paise will be invested through a digital platform. So, Minted's future seems bright. And with that, it's a wrap on today's story. Thank you for listening to this episode. We'll be back with more on Monday.